Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today's topic is going to be again on bank account and clearing account concept. Before getting into the concept, let me just recap what we discussed in my previous video. So whenever there is a mapping between SAP and bank portal, bank statements will automatically get uploaded into SAP and two entries will be generated automatically. One is for payable side, line item wise, you debit clearing account, credit main bank account. That entry will be automatically posted. For a receipt side, line item wise, main bank account debit, clearing account credit. These are the two entries system will automatically post. This is what we understood. Once these two entries are posted, these two entries have to be cleared against the entries which were already posted in the clearing account. What are those entries? What are those entries would have been already there in the clearing account to adjust against these two? That is something which we are going to discuss now. Okay, so what I'm going to do now is I'll divide these entries into three parts: payable entries, receivable entries, and other than payable and receivable, like general ledger related journal entries. I will divide this into three parts and explain to you. Let us start with payables first. Okay, so when we talk about payables, so invoice, when we receive the invoice from the supplier, we will process it. What entry we post when we process the invoice? Debit expenditure or asset or inventory, right? And credit supplier account. This is the entry we post. Next, once we post this entry will be posted once we receive the invoice and process. Then what will happen? Due date will come. We need to make payment to the supplier, right? When we make the payment, how do we make the payment? We run the pay proposal first. We run the pay proposal. When we run the pay proposal, what system does is it will go and pick up those supplier invoices which are due for making payment on that particular day, right? So when the pay run happens, system will post one entry. When the pay run happens, system will post one entry. You know what is that entry? It will be supplier account debit, clearing account credit. What entry system will post? Supplier account debit, clearing account credit. So this entry will be posted when we run the pay proposal, right? After that, what will happen? This pay proposal goes to the bank. Then what banker will do? He will make the payment to those respective suppliers. That is what it happens, right? So when the payment happens to the suppliers, when the payment done by the banker to the respective suppliers, banker obviously record those transactions in our account, right? So once they record those entries, it will appear in my bank statement. Correct? When they appear in my bank statement, what am I doing? I am uploading this bank statement into my SAP, either automatically or manually. So whatever be the mode, this bank statement will get uploaded into SAP. What did I say? What entry system will post when the bank statement gets uploaded? I am again repeating this entry here. What entry we post for payment entries? Clearing account debit, main bank account credit. This is the entry system will automatically post. This is the entry we discussed in my previous video. These are the previous two entries we would have posted before this payment entry automatically posted by the bank. Now, what we are supposed to do, as soon as this entry get posted, when the bank statements got uploaded, you see here clearing account is debit and clearing account is credit. These two have to be cleared, right? Then you see here supplier account debit, here supplier account credit. These two will get cleared. Once these two things are cleared by using those T codes whatever we discussed previously, for GL code we use F-03, for suppliers we use F-44, we use those T codes and clear these transactions. Once we clear, what is left here? You see here, expenditure account debit, main bank account credit. We are left with only these two. All others will get cleared. Understood? So these are the entries. So when the bank statement gets uploaded, this entry will get posted. As soon as this entry get posted, what you are supposed to do? This clearing account you need to first clear, then supplier account also you need to clear. Once this is done, your job is done. In case, at times what will happen? This payment entry will get, posted as clearing account debit and main bank account credit. That's good. At times, what will happen? That payment will get rejected by the supplier bank. When the payment get rejected, this will appear in our receipt side of the statement. That rejection will appear in receipt side of the bank statement. So because payment entry was already showing in payment side, that has to be knocked off, right? So when the payment got rejected, that will get posted in receipt side of the bank statement. When it get posted in receipt side of the bank statement, that will automatically get posted in our books of accounts as well. How that will get automatically posted? When the bank statements get uploaded, this entry also will get posted. How that entry will get posted? Main bank account debit, clearing account credit. This entry will get posted automatically only if the payment got rejected by the supplier bank. Why the payment will get rejected? The payment can be rejected if the supplier bank account details are incorrect. Right? If the supplier bank account details are incorrect, automatically the payment will get rejected. Then what banker will do? Previously he already posted this entry. Now when the payment got rejected, he will post this entry. So once this entry is posted for the payment rejection, what we are supposed to do is we need to reverse this entry. What is that entry? Previously we debited supplier account and created clearing account when the pay proposal happened. That entry has to be reversed because the payment has not gone to the supplier. Since the payment has not gone to the supplier, you need to reverse this transaction. What will happen that entry? Fifth entry, you debit clearing account and credit supplier account. This entry you need to post because payment got rejected. When you post these two entries, what will happen? All these entries will get knocked off and you are left with only this entry. Which entry? First entry, expenditure account debit and supplier account credit. You are left with only this entry. Once this entry is the only entry left there, again you need to start the regular process. What is the regular process you are supposed to do there? You need to go and check why this payment got rejected, identify the right bank account details, go to vendor master data, rectify the bank details, and then again run the pay proposal. When you run the pay proposal again, this entry will get posted again. Supplier account debit, clearing account credit. This time, this entry got posted after rectifying the bank details. Next, it goes to the bank. What banker will do? He will send this payment to the supplier bank account. As soon as the payment goes to the supplier bank account, what banker will do? He will debit clearing account and credit main bank account. See, he will credit in the sense this transaction will get recorded in bank statement. When the bank statement get uploaded into our SAP, this entry will get posted. I'm sorry. This entry will get posted in our SAP as soon as the banker updates the entry in his books of accounts. So clearing account debit and main bank account credit, this entry will get posted in our books. Once this entry get posted, what we will do, again we go and clear the clearing account and supplier account, then we are left with expenditure account debit to main bank account. Clear? So if this is a bit confusing for you, what I sincerely request here is you watch this video 1 or 2 times. You will definitely get to see the flow of transactions. You need to understand, why when you go for any interviews, or when you are working in P2P process, or when you are working in R2R process, if you don't know this entry flow, it's very difficult. You cannot, or you do not, or you cannot expect it to blindly follow the steps. You need to understand the process and then do that, right? So this entry flow is very important. My sincere request to you is, please pause this video, understand each journal entry. In case if you have any doubts, you can comment. I'll definitely try to respond to those questions. Okay, this is about payable entries. Let me go to the receivable entries. I think today's video is going to be a little bit lengthy because I don't want to make another video again for this topic. So I'm trying to close this, in this, video itself. Okay. So let us talk about the receivable entries. What are the receivable entries we generally, get? Customer. So when we sell the goods, what entry we post? Customer account debit, our revenue account credit. Clear? Second, then what will happen? Customer will make the payment. They can give us the check, we go and deposit the check into the bank. Our customer can directly go and deposit the amount into the bank. Anything can happen. Let us say customer is going and directly depositing the amount into our bank account. Then what will happen? It will get uploaded in our bank account, bank statement. Then we upload the bank statement into our books. Once that is done, what entry system will post? I already told you this entry in my previous video. Main bank account debit, clearing account credit. This entry will get posted when the bank statements get uploaded. Clear? Next. Once this entry is posted, as an accountant, what you are supposed to do? You need to go to the clearing account. From this clearing account, you will get to see who is that customer made the payment, against what invoice he made that payment. Those details will be available there. In case if that is not available, you need to ask customer to provide remittance advice. Remittance advice is nothing but customer will provide the payment details. Payment details in the sense, so amount is paid against these many invoices. He will give the invoice details and the amount against each invoice. That information will be provided in an Excel sheet or Word or in some format he will provide to us. That is nothing but our remittance advice. As soon as you get the remittance advice, or as soon as you get to see the details in the bank statement, you need to post one more entry. What is that entry? You debit clearing account and credit customer account. This entry has to be posted. So with this entry, your customer account will get closed because you received the amount. Your clearing account get closed. Clearing account is debit here and clearing account is credit here. Gets closed. So you are left with main bank account debit and your revenue account credit. These are the entries you are supposed to post for receivable side. So what are those entries? First one is revenue entry. As soon as the goods sold or services sold. Next entry is as soon as you receive the payment, which is deposited in our bank, and it will get updated in our bank statement. Once the bank statement gets uploaded, this entry will be posted by the system automatically. If that auto facility is not there, you need to post manually. So this entry has to be posted. This will be done once the bank statement is uploaded. Next, once the bank statement gets uploaded, you need to identify who is that customer made the payment by going through the text details, or if details are not available in the bank statement, wait for the remittance advice from the customer, see the invoice details and customer details in the remittance advice, post this entry. With that, your receivable entries will get posted. So this is how receivable side you need to post. Then we are left with other journal entries. What are those other journal entries? For example, if I go to a bank statement, this is bank statement. What bankers will post? Some of the other than payables and receivables, there are some other entries will get posted. One is bank charges. Bank charges will be debited in our account, right? So this is payment side, this is receipt side in our bank statement, right? So bank charges will be debited in our bank statement. Let us say $100 of bank statement debited. There are some interest credited in our bank statement. There are some overdraft charges being debited in our bank statement. These entries are appearing only in bank statement. They are not there in our bank account, in our books. So as soon as these entries appearing in bank statement, let us say payment side, what do? You will upload the bank statement. As soon as this bank statement is uploaded in SAP, you know what entry we get posted? Clearing account, debit, main bank account credit. Main bank account credit. So for this 100 and 500, this entry will be posted. As an accountant, what you are supposed to do is you go to the clearing account, see what is this 100 pertaining to. There will be a text given. This is against the bank charges. For this 500, you get to see, oh, this is overdraft charges. The text will be given there. As and when you see this is pertaining to interest, bank interest, there will be a GL code for that in our trial balance. What you need to do? You need to debit bank charges or interest, whatever it may be, and credit clearing account. this entry you need to post. This entry is very important. OD interest, same. Bank OD interest account debit, clearing account credit. This entry has to be posted. Here you see, once again I am repeating, the first entry will be automatically posted when the bank statement gets uploaded. That is clearing account debit and main bank account credit. There were no previous entries in our books of accounts because these two are bank charges and bank interest. So obviously you need to go to clearing account and see what is this $100, what is this $500. Based on the text message, you need to debit those charges and credit clearing account. This entry has to be posted by us. Next, you see some credited interest has been credited. So this entry also will get uploaded in this bank statement gets uploaded. As soon as the bank statement gets uploaded, this entry also get posted. What entry? What entry it will get posted? So main bank account debit, clearing account credit. This is the entry system will post. Main bank account debit and clearing account credit system will post. Then you go to clearing account and see the text. Or if clearing account doesn't have the details, you can go to bank statement and see what is this amount pertaining to. You can see there, oh, this is pertaining to interest. I got the interest. So you know. Now what you need to post? Clearing account. Clearing account debit and credit your interest account. This entry you need to post. First entry was automatically posted by the system. When the bank statements got uploaded, then you go identify what is this transaction, then you post this entry. This is how you need to identify the transactions in our clearing account, post them to the respective GL accounts, and your responsibility to clear the clearing account and also clear your supplier and customer accounts. End of the month, you need to make sure that your clearing account is zero. If the clearing account is not zero, you need to identify which are those entries causing the difference. Please put them in open item tracker. Identify who are those users, responsible for, resolving this. Talk to them, get the corresponding entries, post them, ensure that your clearing account is zero. This is how your main bank account and clearing account concept works, and this is how the bank reconciliations are done in all multinational companies where there is a main bank account and clearing account concept is in place. I hope this concept is clear. If you like the content, please like the video, subscribe to my channel, and share this video with your friends and colleagues. Thank you so much.